Hello guys, Saikido here. Sorry about that. So today I want to talk about these four things right here, and more specifically the quarterly theory, okay? And I'm going to be showing you with an example of a trade that I took on the 27th of March, which was the Dow Jones trade. So on this trade, there was something that I actually, when I'm back testing it now, I actually found out something that I made me want to record this video basically because I don't think you guys don't know what the ICT 2022 model is. The price premium and discount. I actually do um teach in my mentorship this the use of this. I show you how to use these things here when you're moving from external range liquidity to internal range liquidity and vice versa from internal range liquidity to external range liquidity, because that's basically how the algorithm works. Okay, so today I want to just highlight something that's this weekend I've been back testing this, and kudos to Trader Day. I think this is his observation, and I think maybe you know I fuck with it too, to be honest, because whoa. So basically, how I'm going to be showing you guys is how to actually employ or use time, because ICT in his videos he always says he's not teaching us the real enigma, meaning what he's teaching us. He always uses this example of Pepsi and Coke. So he tells us he's giving us Pepsi, is not like giving us the real stuff, which is Coke. And with this quarterly theory, it might be true that the real enigma is the Coke, is what I'm going to be showing you guys exactly on this chart today. So let me go on and do this. So we are going to be looking at time of day first, and then we are going to be looking at premium, discount, external range liquidity, internal range liquidity, and then we're going to be looking at the ICT 2022 model, and then we're going to be looking at the risk to reward ratio. And you can use this model to pass prop firms to quit your job. You can basically make a million. He said ICT, on his one of his videos, he said if anyone wants to make a million, they must stick to the silver bullet. This is almost the same thing. Almost the same number of handles. It's basically the same thing. But this one is going to be the 2022 model because of the 930 judo swing, which is exactly what I'm going to be showing you here. So here on the 27th of March, I'm just going to go on and open my session breaks. I don't know if it's going to bring up. Okay, there you go. So this is the 27th of March, this price delivery here, because I was trading this retracement back inside here. So we were inside this dealing range, swing low, swing high. And if you move from discount to premium, we expect a move from premium to discount. Okay. It's the same as external range liquidity to internal range liquidity. Okay. So it doesn't have to be the discount of the same dealing range, because here you are moving from the discount of this dealing range, swing high, swing low. You are moving from discount to premium, and you have an imbalance at premium. And then you can be going back from a discount of a newly formed dealing range. If you look at the swing high, this is a dealing range on a smaller time frame on its own, this 1 hour candle, right? Provided that we've done the hard time frame objective is achieved, which was going from discount to premium and to actually fill this imbalance. Now I want to show you what the time or theory is, okay, or how I'm referring to it, okay, according to my understanding. So if you look here at this premium array, and if you look at time here, at the bottom. This was created exactly at, it's a 10 o'clock candle, right? And if you look at what time do we get a reaction off of that same PDRA, look at this bearish candle that went lower from premium to discount of this dealing range here. If you look at the swing low here, or this swing low on a small time frame to swing high, we moved from there to there, and we get a reaction at the same time. I've been looking at this and I've been observing this, especially if you're using like 1 hour, 4 hour. If you are trading in close proximity, so my conclusion is this: if you are trading in close proximity to a PDRE that was created at the same time, you must anticipate it to do its job. If it's a premium one, it must send price to discount. If it's a discount one, it must send price to premium. It could be short term, it could be because overall we were bullish, I think, for the week. So we went on to go higher. It doesn't mean that it should push price lower to extend our range liquidity here, but for a scalp, it's gonna propel price to the direction, to the right direction. Okay, so I'm now gonna move on to the smaller time frame. Okay, let me just first do this. So this is the dealing range I was focusing on, and this is the 9 that on a smaller time frame you're gonna see and understand every annotation here. But I just want you to know that when you see the 4 hour C below on a smaller time frame, I'm referring to this imbalance. Okay, so I'm now gonna move from this to 15 minutes. Now I want to cover the Judas swing. Okay, if you are going to be trading the ICT 2022 model, the 9:30 opening pair, right, is mainly, or in most cases, is the Judas swing. So it's gonna move in the opposite direction of that 10 to 11 o'clock delivery. Okay, it's going to move in the opposite direction, and it must satisfy a hard time frame PDRA. It could be a swing low, it could be a fair value gap. Okay, it could be any PDRA. So in this case, there's a 4 hour CB, and you can see that this 15-minute chart, which was the 9:30 opening, was, it did exactly that. Okay, and then if you go to a smaller time frame to see what was happening or what happened when price reached that high time frame PDRA, you can see that this Judas swing here, it is just a build up for this. Now, what had happened the whole entire day since Asian session? Now you can go. Let's just zoom out a bit. So on this day, I'm just gonna open the session breaks. You can see that we opened somewhere here, and then this is the midnight open, right? Somewhere here. I have that extended out. So this is the Asian range. It went higher. Price was pretty much bullish the whole London session, right? This is the London session, 2 to 5. 2 to 5. 2 to 5 is somewhere here. Wait, 2 to 5. 2 to 5 is London session. Okay. I can call it accumulation because if you look here, this is just accumulation. So another thing that a trader day emphasizes, let me try and bring up his indicator. See if it's gonna load. Okay. Okay, I think I should just adjust the settings. I'm not really familiar with this right now. Let me check microcycles. Okay, it's showing me that daily cycles. Mm, why is it not showing me this? So I think it doesn't show previous data. I need this data here. So I don't know. I just got it recently. You don't really need it if you understand what's happening here. And I just told you everything, by the way. I don't use this indicator. Maybe I am going to use it in the near future, but basically you can see that London was pretty much an accumulation, and this is manipulation, the Judas swing, New York AM, the opening pair was a Judas swing, and then here we move to this 4 hour CB. I'm just going to zoom in and just leave it like this. Okay, there we go. So we made it, sorry, we made it to the 4-hour CB right there. And then we dropped lower. Now this fair value gap is a BC, is a bullish fair value gap. It was supposed to hold price and push it higher, but time was, if you think of time before price, now it's already 10 o'clock and we have an imbalance that we just traded into. Let us create it at 10. And you see this drop, this fair value gap is failing to hold price. On retracement, this becomes the ICT 2022 model. Basically, you need a high, a low, higher high, and a lower low. So this is a chain, this is a bearish market structure shift here. And then distribution to the sell side, okay? So I just told you time, I told you a price, which is premium to discount. And if you look here, you have a new dealing range on this specific time frame, right? You have premium, you're moving from premium to discount. What PDRAs do you have at discount? So now you can use the true session open, 730 opening price, and you have a fair value gap, which is the M5. This is M5 discount BC, right? This discount BC, you can use any PDRA basically below equilibrium because you're going to move from premium to discount, right? The first PDRA is you have a bullish order block here, and then you have this swing low, and then you have this M5. This swing low is actually from the 5-minute fair value gap in the form of a BC. So this is what I was targeting because it's also in line with the true session open. I think, sorry, I was actually targeting the true session open because in most cases we are going to refer back to it. And if you look at the bodies of these candles here, they tell you that it's very much important. You know, they highlight the importance of the true session open, which is the 730 for New York session, right? And this trade was taken, I'm going to show you now on this. This is my Instagram, Saikido Capital. You have this Judas swing 934 RCB. I entered there. I'm now going to go to the next slide, and you can see here I highlighted the equilibrium of this new dealing range here because I know I'm moving from the premium of this to the discount of this. So you look here, and then you have the opening price 930. This fair value gap, true session open, it's in line with the true session open. This fair value gap, these fair value gaps are the ones that they act like magnets. They are a good entry for buys. They're also a good targets for take profits. So you can see that 2022 model, that's when I entered, then I was targeting the lows right there. You can see the execution. This is Dow Jones 1 minute 2022 model. And you can see I'm about to hit my take profit right there. Okay, and also on X, I highlighted the same thing. Now this is my handle. Where is it? Yeah, follow me on Instagram, guys. So this is the 930 jitter swing into the 4-hour premium BC, then the bearish market structure shift on M22 market, sorry, M1, and then this is the 2022 model. I was just looking at this, and then here, since this was this propelled price, this is also a bearish market structure shift. So at premium of this dealing range, you have that bearish order block, which I was thinking and hoping it was going to push price lower to take sell side liquidity, and it did exactly that. Okay. And also here, this bearish market structure shift, this new bearish market structure shift, I actually took a trade here. And then I was aiming for, because I wanted to see a reaction from this. I wanted to see displacement from this premium to break the lows here. Then on retracement, I just sold as soon as it broke below with displacement there. I sold this retest to that breaker. I sold that. As you can see, my entry now is targeting the lows here. I think there is an execution. If you click on this, the execution is shown right there. After taking profits from this, I took a sell, not when it took out, not when we hit the bearish order block. I wanted to see it respect displacement from that, and then I saw that, and then a retest, I went lower with it to target sell side liquidity right there. This is I think this is it. I just wanted to highlight the use of external range liquidity time and price theory, and then especially if you're like on the 1 hour, just make sure to look at time. What time was that imbalance created? Okay, and you make sure that you um capitalize on that. Okay, this is it from me today, guys. I don't want to make this video any longer. Just go back and study premium, discount, external range liquidity to internal range liquidity, and then you basically, that's all you need basically, and then you understand the sessions, because here you can see that this is New York open. It opened at 7:30. Now I don't need to be highlighting, New York open from here to here. 7:30 to 11, that's when you basically want to be out, and then you can see here exactly the target was hit just before 11, and then we consolidated, manipulated, and then distributed lower again, and now we were, had sell side liquidity resting below here, and basically it's all that you need. I think if I can open days um microcycles, maybe it's gonna show here. Let's see, let's test it and open microcycles with this. It's not going to show, but I can see it. Accumulation, manipulation, distribution. Now this is there's a macro here, lunch hour macro. Okay, a lot of macros going on right there. We don't need this really. Yeah, but that's it for me, guys. And you can see displacement after manipulation above the highs here. And then that fair value gap obviously is what it was an entry to sell side here, and sell side liquidity resting also below here. And you can also think of this as original consolidation lows, and then market maker buy model, market maker sell model, second stage distribution right there, like this. Let me just show you real quick. Original consolidation lows. I don't know if I had these things highlighted on mine. That this is a buy model, then this is your sell model. Sorry, and then this is your sell model right here. Back to original consolidation lows right there. So I don't know if I have this highlighted. Oh, I did actually. There's a chair. There's a chair on my X, and the original consolidation lows is actually the 8:30 opening price. Pretty much significant, and you can see I also highlighted that fair value gap right there. That was a good entry to the downside right there. So that's it from me today, guys. I hope you go back and study these things. The model is pretty simple. You need a high, a low, higher, then a lower low. Breaking structure on retracement, you hit the fair value gap, and it's that's the 2022 model. Then your risk to reward, and then if you apply, like for example, look at this, the fair value gap that creates, I mean, the three candles that create a fair value gap. Look at this, 1, 2, 3. Let me do this. We have 1, 2, 3, the fair value gap. If you're gonna sell, this fair value gap, your stop loss should be above the high of that candle. Okay, sorry about that. So your stop loss should be above this high. Then you risk a quarter of, or maybe 0.5%. And then this is a good risk to reward ratio right there. This is a 4R. Basically, this is a 4R. So if you're risking 1% of the account to make 4%, that's a good ratio right there. Okay. Yeah, that's it from me, guys. Have a good evening. Cheers.